Anies Baswedan kian meroket setelah Anies direshuffle dari Menteri Pendidikan dan Kebudayaan pada era pemerintahan Jokowi. Ia percaya bahwa restu dari ulama sepuh di ujung timur Pulau Jawa sangat manjur dalam pemenangannya menuju Pilpres 2024. Menko Marves Luhut Binsar Panjaitan menyebut persoalan warga Rempang, Batam, Kepulauan Riau saat ini sudah ditangani dengan baik. Luhut mengakui tindakan pemerintah yang ingin merelokasi warga Rempang pada tahap awal atau beberapa waktu lalu kurang pas. FF 14 tahun yang merupakan korban perundungan atau bullying teman-temannya di sekolah di Cilacap kini dirawat intensif di Rumah Sakit Umum Daerah Majenang, Kabupaten Cilacap, Jawa Tengah. FF menderita keluhan sesak napas sejak semalam usai dianiaya teman-temannya. Kasat Reskrim Polresta Cilacap, Kompol Guntar A. Setioko menyebut, dari hasil ronsen di RSUD Majenang diketahui tulang rusuk sebelah kiri korban patah. Juru bicara Yeni Wahid, Iwan Setiawan menilai masuknya nama Yeni merupakan hal yang wajar di dalam bursa Cawapres Ganjar. Mengingat saat ini anak dari Presiden Gus Dur merupakan tokoh perempuan dan milenial yang konsen terhadap isu-isu kebangsaan serta memiliki track record yang mumpuni. Dia menilai masuknya Yeni Wahid dari radar Capres Ganjar tak lepas dari keinginan para capres untuk menggandeng tokoh dari Nahdlatul Ulama sekaligus untuk meningkatkan suara mereka di Jawa Timur dan Jawa Tengah. Ketua DPP PDIP Ahmad Basarah mengatakan sangat memungkinkan wacana duet antara Ganjar Pranowo dengan Prabowo Subianto dibuka kembali. Namun duet itu masih tergantung 5 aktor di dalamnya, seperti Presiden Jokowi, Ketua Umum PDIP Megawati, Ganjar, Prabowo, dan para Ketua Umum Parpol Koalisi Indonesia Maju. Sekjen PDIP Hasto Kristianto tidak berkomentar banyak saat ditanya apakah sosok Cawapres Ganjar Pranowo akan datang di Rakernas PDIP siang ini. Dia hanya menyebut bahwa mereka yang akan hadir adalah para sahabat dekat PDIP, termasuk para ketua umum yang mendukung pencapresan Ganjar.
Terima kasih sudah nonton. Jangan lupa like, subscribe, dan share ya.
We tried to have you on the program back in 2020 for a little history lesson here. Visa was going to acquire Plaid. We sent you a quick email and you responded, hey, let's wait until the deal closes, but that deal never closed.
Well, first off, apologies if I pushed you off for so long, but
It's reasonable, I think.
This Week in Startups is brought to you by Vanta. Compliance and security shouldn't be a deal breaker for startups to win new business. Vanta makes it easy for companies to get a SOC 2 report fast. Twist listeners can get $1,000 off for a limited time at vanta.com/twist. Embroker's startup insurance program helps startups secure the most important types of insurance at a lower cost and with less hassle. Save up to 20% off of traditional insurance today at embroker.com/twist. And while you're there, get an extra 10% off using offer code TWIST. And Fount. Do you want access to the performance protocols that pro athletes and special ops use? With Fount, an elite military operator supercharges your focus, sleep, recovery, and longevity, all powered by your unique data. Want a true edge in work and life? Go to fount.bio/twist for $500 off.
All right, everybody, I can't believe it, but the all-star summer continues. It's ridiculous, the guests who are coming on this week in Startups, 1,800 episodes in. We just decided, let's get all the greatest founders on, folks who have really defined their categories, built huge, enduring companies, faced multiple crucible moments, as my friend Rulof at Sequoia talks about, and let's just chat them up because, they feel at home here on This Week in Startups. It's a founder-to-founder, capital allocator to founder talk. We try to keep it 100. We keep it a buck here. And, a lot of the value in the technology ecosystem is becoming the platform, the backbone, and helping other people build businesses. We've seen this over and over and over again. Is it a sexy business to be in? Well, maybe some people would rather touch the consumer directly, but these foundational companies are so important. One of the greatest ways to build a big, enduring company is to help other people build companies, small to medium-sized businesses like HubSpot, who came on the program recently, NVIDIA. That's the backbone for this whole movement right now in AI. And then, of course, OpenAI with their ChatGPT 4. That's a backbone for a lot of apps. And Plaid is a company that if you're in the technology space, if you're an entrepreneur, because it's the backbone for so many consumer banking applications. FinTech has had a complete revolution thanks to companies like Plaid. Now, you don't know you're using it, but they do a lot of the back end for people like Shopify, SoFi, Venmo, the things that do touch consumers. And I'm really excited to have Zach Perret on the program today. He's the CEO and co-founder of Plaid. How are you doing, Zach?
I'm doing well. Thank you so much for having me. I've long loved the program. I'm happy to be here.
Oh, thanks, pal. I appreciate that. And you started, 2012 with Plaid? So it's been a 10-year journey now.
I did. I started in 2012. It's been a little bit over 11 years now.
Wow.
And it still feels like we're just getting started.
Yeah, this is the crazy thing about when you find great product market fit and you delight customers, it does feel like even in the second decade, you're just getting started. I hear that over and over again. Even when I was talking to Stanley Tang, the co-founder of DoorDash, and somebody asked him what it's like to be a public company now. And he said, being a public company is like you're a great team, playing in college, and then you get into the NBA, and it's just a whole different league. And like the game starts over again, if you will. Now, we tried to have you on the program back in 2020 for a little history lesson here for people who don't know. Visa was going to acquire Plaid. And we sent you a quick email and you responded, hey, let's wait until the deal closes. But that deal never closed. Tell us a little bit about that crucible moment, to Craig Rulof's term, for the Visa transaction and it not closing, because that must have been, in the short term, I'm guessing, absolutely crushing. And in the long term, it's turned out to be absolutely one of the great trades of your life, I think.
Well, first off, apologies if I pushed you off for so long, but it's
reasonable, I think.
we decided in kind of the end of 2019, very early 2020, to sell the company to Visa. And this was for a wide variety of reasons, but largely because we felt like we could accelerate the business much more inside of Visa than from the outside. So I think you and your listeners probably know what Plaid does, but we build the infrastructure that enables fintech companies to interact with bank accounts. So the way that your Chase checking account talks to your Venmo app, the conversation between your checking account and the Venmo app, that's the infrastructure that we build, and apply that across almost every application that your bank account touches. So chances are most of the people listening have probably used Plaid in one format or another. And the decision to sell to Visa, while a very hard decision, was one that we thought could really accelerate the business on the other side. Having access to a lot of Visa's technology, having access to their distribution. We were pushing on internationalization at the time, and obviously they're a large international company. So having that access, we thought would really accelerate the business. Now, we made the decision kind of end of 2019. We signed the paperwork in, I think it was January 15th or so of 2020 to sell the business. I guess you reached out to me sometime thereafter. Yeah. I don't remember the exact date. So, some of these times are a little bit of a blur. I wasn't sleeping all that much those days.
It's pretty nerve-wracking, I'm sure.
Exactly. And kind of fast forward a couple months, and then begins COVID. And, you have this very difficult decision to make to sell your business. And I think it's the hardest decision that a founder ever makes if they make it. And, I was conflicted about it at the time. It was a 51-49 decision when we decided to sell. Then hits COVID and the markets crash. And all of a sudden we have this all cash transaction that is locked in. Interestingly, in our docs, there was a clause that says, even in the case of a pandemic, Visa cannot walk away from this transaction. Which was a bit funny for me. And so you look like a genius at first, and then little by little, the market turns and so forth. But along the way, the regulators came in and said, hey, we want to investigate Visa for antitrust. It had nothing to do with Plaid. And this regulatory investigation continued. But kind of as we went through COVID, we went from having the markets crash, the bottom fall out of the markets, to all of a sudden, consumers came around and started saying, I don't want to go to the bank, but I need to do things in financial services. I don't want to go to the bank, but I need a loan. I need to apply for a mortgage. I need to do all of these different things that a consumer needs to do in their day-to-day life. And so we saw this massive increase in adoption of digital finance. So it was the banks building things. It was the non-banks, the traditional fintech startups building things. It was retailers jumping in saying, hey, I want to build a fintech product too. So we had this huge acceleration of our business kind of going through COVID. And, I joke that if I'd written a Hollywood script to accelerate our business, I might have written a script like this, except realistically, I am not creative enough to write any Hollywood script ever.
Yeah.
But we had a Visa brand moment, huge acceleration of the business. The DOJ investigation, the antitrust investigation took so long that we actually lapsed exclusivity on the other side. So a year after we'd signed the deal to sell the company, we got to the end of it and had the opportunity to say, do we want to stick in this deal or do we not? And at that point, we made the decision to go on the independent path for many reasons, but mostly, our business had transformed, the market had transformed. And, looking back, I think it's one of the most formative, best, most interesting experiences that I've ever gone through. And I think we were lucky to have the outcome that we did. I couldn't be more thrilled for the independent path that we're on now. But man, did I sleep so little in that year. That was so stressful.
I mean, I'm assuming Visa was bummed. And then my friend Brad Gerstner from Altimeter led your funding round in 2021, if my research is correct. And that was at like a $13 billion valuation. So, essentially the price of the deal more than doubled, or the value of the company more than doubled. And Visa must have been bummed to not have you in the fold. But these things are very hard in today's day and age. It's hard to get through regulators here in America. I'm wondering what you learned in that process.
For me, the thing I learned, and I'll tell this to all the entrepreneurs that are listening, is if there's regulatory risk, you should get a substantial breakup fee put into your deal. I think we, as
did you have one or no? Is that like a lesson after?
We did not have one, so lesson after. But it is, it was interesting because the regulatory climate shifted right around the time that our transaction was going through. So we kind of sold kind of like end of the Trump administration, shifted into the new administration. The climate for antitrust regulation got much stricter. Plaid was one of the deals that, despite the fact that we didn't get kind of finally blocked, nor did we finally close the deal, we decided to walk away before we got to the final steps. Plaid was one of the deals that caught a lot of headlines and in some sense kind of set a precedent for future antitrust. Now, obviously, the antitrust climate has changed in the economy over the past 10 years. And for me, I think the big learning is try to do what you can to understand exactly what's going on regulatorily, but also protect yourself on the back end.
Yeah, the breakup fee has become kind of standard. I had one of these when I sold my blogging company to AOL. We negotiated and this is a small transaction, $30 million transaction, but because we were in the thick of this deal, it's obviously a distraction for management. And so I think they had a $500,000, not breakup fee, but the way they did it was, we'll buy $500,000 worth of advertising on your blog network in advance if we hit this date. And so we hit that date and I said, okay, ship it. And they're like, we're 4 days away. And I was like, okay, ship it. And they wrote back and they're like, okay, can we ship you half of it? And then you give us a 2-week extension. And my attorney's like, yeah, that's totally reasonable. So they wound up giving us half of it or whatever. It took the edge off. And then we didn't seem like we were complete jerks. But yeah, I think a lot of the acquirers are happy to do this, knowing that that gives them the room to complete the deal. But yeah, you have to know the game on the field. And the game on the field right now is tech equals bad. Tech has too much power. Therefore, it doesn't matter what the acquisition is. Even if it's accretive to consumers, even if it increases consumer choice, even like in the case of Activision and Microsoft, even if it lowers prices. Yeah, we're just going to block it because capitalism equals bad, according to the current administration and Lina Khan, or the EU, and I understand it for some of the larger companies, but I'm not sure if I understand it for this size acquisition. I think we need some rules of the road. If you're a SaaS or services company that stores customer data in the cloud, then you need to be SOC 2 compliant. You knew that, from a third party, and you need that third party to close big deals. And if you want to get compliant easier and faster, you need to use Vanta, V-A-N-T-A. Vanta makes it so easy for you to get and renew your SOC 2. On average, Vanta customers are SOC 2 compliant in just 2 to 4 weeks. Compare that to 3 to 5 months without Vanta. And Vanta can save you hundreds of hours of manual work and up to 85% of compliance costs. This is a total no-brainer. And Vanta does more than just SOC 2 compliance. They also automate up to 90% compliance for GDPR, HIPAA, and more. You can't afford to lose out on major customers. We all know that. Listen, it's a hard year. Last year was hard. You can't lose those major customers because you don't have your compliance dialed in. Just work with Vanta. Get your compliance automated and tight is right. Lock down those big deals. Here's the best part. Vanta is going to give you $1,000 off. That's 10 hundies. Get $1,000 off at vanta.com/twist. That's vanta.com/twist for $1,000 off your SOC 2. So just explain to the audience what Plaid does, who your biggest customers are, and essentially why they don't do this themselves, right? Because being able to, if you're spending a lot of money with Plaid or Stripe, there's always this buy versus build conundrum. So maybe you could discuss that.
Definitely. So the core thesis of Plaid, and this is kind of coming out of our own personal experience in 2012. Myself and my co-founder, we tried to build a bunch of consumer fintech products and learned a bunch of things along the way. The most important one was that the infrastructure to connect with a bank account between your consumer fintech product and bank account, it didn't really exist. And so we decided to go out and build it. And I can come back and tell that founding story if it's interested. But what we build is basically the ability to link your bank account to an application. This could be anything from a budgeting tool that you use to an application that you're using to make an investment or pay a friend. On the investing side, we work with companies like Robinhood and many others. On the peer-to-peer side, we work with Cash App and Venmo and all sorts of other peer-to-peer companies. The connection between a bank account and an application historically really didn't exist. So in a budgeting application, you'd have to upload documents or type in transactions manually. Now it's digital. You just get a feed of transactions that occur in the bank so that you can get your budget updated automatically. In the case of a peer-to-peer payments application, you either had to use a credit or debit card, which is relatively expensive, or you could try to do an ACH transaction, which is a bank-to-bank transaction. But those are relatively clunky and the onboarding is difficult. And so we created kind of this digital linkage that enabled a much more seamless bank-to-bank payments experience. And these days, the products have expanded a lot. So we've gone from just doing bank account linking to now we have an identity verification product, and we have a risk and fraud product suite. We enable kind of bank link payments more broadly, and we do kind of credit analytics. So if you're applying for a loan, chances are you might have used Plaid to kind of upload your employment data or verify your asset data if you're applying for a mortgage or something like that. So it's now become very broad.
And you guys dipped your toe into crypto or jumped all the way in the pool, and maybe your experience there, because a lot of the crypto products were trying to build these bridges. I assume that they tried to use Plaid to do that. And obviously that's created regulatory friction, I would say would be the kind way to say it.
Well, I don't think the regulatory friction had anything to do with Plaid, but what I'll say is we work with crypto companies in two formats. First is they're our customers. We help them do account funding. So let's take Coinbase, for example. How do you transfer money from your Chase account into your Coinbase account? Well, we help set up the transaction and make sure it lands. And then we do a bunch of fraud analytics that sit on top of it as well. So that's part one, is they're just a standard customer of ours. Part two of working with crypto companies is we found that a lot of our budgeting customers or our wealth management customers, they wanted to be able to see crypto assets as well. So, for example, if I'm using a wealth management tool to see all of my assets, I don't just want to see my traditional assets. I also want to see my Bitcoin or my other coins that I have. So we integrated into a bunch of the exchanges. We integrated directly into a bunch of the blockchains so that you can connect your crypto data into your wealth management or your budgeting application as well. We haven't gone a lot further in crypto. Yeah, maybe we will eventually, but those are the two ways that we do now.
Yeah, I think a little more regulatory clarity would be great, and But you're actually in the good guys in all of this because you're making sure like nothing you do is on the crypto side in terms of anonymity or permissionless. Everything you do is filled with permissions and know your customer, obviously, and a lot of regulation.
Exactly. And actually, I mentioned that we do identity verification previously. For the companies that are using Plaid to do account funding, we're also, in many cases, doing their identity verification, doing their KYC checks. That kind of identity verification and risk and fraud analytics business for us has been one of the most rapidly growing ones over the past couple of years. It's been really fascinating to get a lot of exposure to that market and see kind of all of the things that are going on.
What was the origin story? How did you come up with the idea? And then how did you know you had any kind of product market fit? That's always like a very interesting thing, I think, for the audience here is that triangulation and then knowing if you have light product market fit or you medium, strong, or even market pull, right? Maybe you could take us through that journey.
Our founding journey was circuitous. It was a bit messy and certainly required a lot of hustle.
Yeah,
exactly. This seems to be standard these days. My co-founder and I had the idea to start a company that helped consumers live better financial lives in kind of 2012. And we were fortunate that some friends let us squat in an office in New York City, just off of Union Square. And if you remember in 2012, that was kind of towards the tail end of Occupy Wall Street.
Yeah.
And in 2012, they kicked all of the Zuccotti Park protesters out of Zuccotti Park. They all moved up to Union Square. And so it was almost every day that we were walking to the office that we would walk through these protests. And setting the politics of all that aside, the fact is consumers were really frustrated with financial services. They felt like banks weren't serving them. They felt like banks weren't putting their best interests first. They wanted better access, cheaper rates, so on and so forth. And so being kind of naive entrepreneurs in our early 20s, we said, great, let's go build an app to help consumers, solve this problem. We can solve it ourselves. So we set out to build a consumer budgeting application. We ended up building 6 or 7 different versions of kind of consumer spend analytics tools. And through that process, we realized 2 important things. First is all of the applications that we were building didn't work. And they didn't work because we would tell consumers, hey, you're spending this much money and you should spend less money. Turns out when you tell a consumer like, hey, you're doing this thing that you want to do and you should stop doing that thing that you want to do, the natural reaction is just to delete your app. So pretty quickly we realized that the products we were building just weren't getting any traction. The second important thing was that getting the data from the bank was immensely hard. So we wanted to build a budget that updated every time you swiped your credit card. That was really hard to get that bank data feed. And so we ended up kind of talking to the banks and then kind of building these integrations to their systems in order to collect that data and structure it really well. And that was what we spent like 80% of our time on. We never thought that this could be a B2B business until one of my friends actually came to me and said, and so he worked at another fintech company at the time. He came to me and said, hey, Zach, your app's really dumb, but I'd like to license your backend. Can I just pay you money to license your backend? And that was the first inclination for us that maybe we should make a pivot. And so little by little, we started working on, hey, could we turn this into an API? At the time, we only had one bank that worked for this. So we were literally building a budgeting app for one bank.
Which bank did you get first and how did you get them? They must have thought you were crazy when you came in there and said what you wanted to do.
Well, yeah, that was a whole other story. But the first one that we actually worked with was American Express. So not technically a bank, but a card provider. And when we went and first talked to them, they said,